And so it looks like we're going to be getting a $15,000 tax credit. Hello, Beata Bukowski coming to you from Fairway Independent Mortgage. Yes, a bill was introduced and this is one of the items on President Biden's platform, running platform, when he was during the election process. $15,000. The way the proposal reads is that any first-time home buyer that makes per family no more than 160% of the area's median income, and the purchase price does not exceed 110% of the area's median purchase price, will be able to receive a tax credit after closing up to $15,000 or 10% of their purchase price, whichever is lesser. Anybody that bought a property after December 31st, 2020 would qualify. Since this is being introduced to the Congress as part of President's larger infrastructure bill, it is very likely that it may get enough footing to actually pass. And so this will enhance our first-time buyers quite tremendously. In other news, another bill is being introduced to make it a little easier on FHA mortgages to qualify for those that have outstanding student loans. Remember, there is a conventional product right now, actually conventional and FHA product, a government of Illinois sponsored product where called Smart Buy, where a student loan can be paid off via this grant from the state. On standard FHA mortgages, qualification when somebody has outstanding student loans is a little harsh. We have to use a specific percentage of an outstanding student loan balance to qualify, and the bill is proposing to recalculate, change that a little bit, which should help a tremendous number of new buyers to qualify for make more homes affordable. Going back to that bill that's proposed for the $15,000 credit, this is aimed obviously at the low to moderate income census tracts and is really a huge push for new household creation. In other news, loans and forbearance have dropped yet again. We are now at 4.49% of all mortgage loans outstanding are still in forbearance. Sales of existing homes have declined from February to March, but only because of lack of inventory, not because of lack of interest. There are about 1.07 million homes for sale on the market in March, which is slightly more than there were in February, but it's still 28% less than March of 2020. New home sales surged in March. They came in at 21% higher than February, and yet February figures have been revised for the higher. So builders are finally meeting the demand head on, and that should bring more inventory to the market. New construction inventory is equivalent of about 3.6 months supply, whereas existing home inventory is a little over 2 months supply. In other news, initial jobless claims dropped 39,000 to 547 in the last week, and that's the second week in a row of significant drops. The only caveat here is that there's still over 17.5 million people receiving some kind of unemployment benefits, standard or the extended pandemic unemployment. For all of you that think interest rates are too high or are climbing up too fast, just a little historical example. In 1981, a 30-year fixed mortgage was at 17%. In 2001, it was at 7%. Today, on average, the interest rate is hitting 3%. It's 2.99. Quite a bit of difference looking at these last 30 years. That's all I had for you today. Please give us a call with any questions, comments, or concerns, and please do check out our emails. We are bringing in our specialist on all down payment assistance programs available, federal and Illinois, for next Tuesday's coffee talk, which always takes place at 10:30 in the morning. please join us then. Until then, have a wonderful day.